Sales through Kubota Global Network during the quarter ended June 23 contribute approximately 32% of the total export volume. Segment revenue for the agri machinery business division was up by 4.4% to 1,666.8 crore as compared to 1,595.8 crore in the corresponding quarter. EBIT margin for agri machinery business division were up by 285 bps to 13.4% as compared to 10.6% in corresponding quarter and was up by 348 bps as compared to 9.9 in sequential quarter, mainly led by improved price realization and softening of the commodity prices. Going forward for FY24, we expect the domestic tractor industry may register low single-digit growth led by adequate reservoir levels, better crop prices, better liquidity, and adequate credit availability. Coming on to the construction equipment business, our serve industry volume of crane, backloader, and compactor were up by 30% in Q1FY24 as compared to the corresponding quarter, led by growth in the crane industry by 59%, backloader industry by 23%, and compactor industry by 32%. Our total volume of manufactured and traded product went up by 42.1% to highest ever Q1 volumes of 1,373 machines as against 966 machines in the corresponding quarter. Segment revenue went up by 46.3% to 360.1 crore as against 246.1 crore in the corresponding quarter. EBIT margin for the quarter ended June 23 went up by 658 bps to 7.6% as against 1% in the corresponding quarter, led by operating leverage, better realization, and improved product mix. Despite the onslaught of monsoon, there is a sustained demand for construction equipment industry, led by government thrust and focus on faster execution of infrastructure projects. We expect current demand momentum to continue going forward and further accelerate post-monsoon in balance of the year. Coming on to the railway division, revenue for the quarter ended June 23 went up by 71.8% to our highest everly quarterly revenue of rupees 297.7 crore as against 173.4 crore in the corresponding quarter. EBIT margin went up by 738 bps to 20.9% in quarter ended June 23 as against 13.6% in corresponding quarter. Our order book for the division at the end of June 23 is approximately 950 crores, and we continue our focus on expansion and diversification of railway business product line. Now I will request the moderator to open the floor for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raghunandan from Nuvama Institutional Equities. Please go ahead.
Thank you, sir, for the opportunity, and congratulations to the entire team on stellar numbers. My first question was on the agri segment. Can you provide a rough breakup of benefits QOQ? I mean to say the margin expansion drivers QOQ in terms of commodity deflation, price increase, and any other factors. Also, if you can talk about a broad range for the full year, that will be very useful.
So, Raghu, you are saying quarter-on-quarter changes?
Yes, sir.
Okay. So on the tractor front, I think the overall commodity price, as we mentioned, has been softening. So in the last 3 quarters, we've seen the trend has been positive. So from the peak level, what we hit in Q2 of last year, from there the commodity prices have moved down significantly. So it's almost 2.5% reduction which has happened now so far. from the peak level which was achieved, which is what we are seeing reflected in the margin too. On the prices from the last quarter, we have taken one price increase which was taken in the middle of June. So the full impact obviously is not visible right now, so which was roughly 1%, and that impact probably will come in the coming period.
And any other factors, sir, in terms of mix being better or anything which the company has been focusing on to support margins?
So if you compare to the last year, the mix has not been better, but maybe quarter on quarter it may show some positive impact, but nothing significant as such.
And for the full year, sir, would you look at sustaining at the current range?
Using the mix or the margins?
Margin, sir, for the tractor segment.
Yeah, looks like we should be able to sustain. If you recall, we had given the guidance of hitting actually 13 to 14% range by the year end. But fortunately, this time, because the commodity prices have softened, so that impact came much earlier. So we expect that should be sustained in the balance of year.
That's good to hear, sir. Thank you so much. That's very useful. My second question was on the tractor industry outlook. Given how last 2 months of monsoon has panned out, and of late there is a very encouraging trend in both monsoon as well as the kharif sowing. How are you reading the demand situation, and you retain the single digit growth outlook for the full year?
Hi Raghu, this is Harish. Right, as per the current estimate, we foresee the market to be low to mid single digit growth this year as compared to the last year. So there are positive trends in the market that we see in terms of prices, reservoir levels, rainfall, etc. But we also see a softening in terms of some of these subsidies. So as a mix, we see around low to mid single digit growth.
Thank you, sir. Lastly, on the railway side, I wanted to understand, as you explained, very strong revenue performance for Q1, 72%. So based on the order book, how do you see the full year growth panning out? And if you can elaborate a little, what is driving this full year growth? And related to that, even on the margin side, a 20% plus margin is, an extremely strong number. Is it due to scale, or is there localization also contributing to the margin expansion?
Hi Raghu, good evening. This side Ankur Dev. So first about the revenue. So in quarter one we have a lot of benefits I would like to mention. One is higher sales of spare parts, higher sales of exports, and in terms of the full year, we see that there will be a growth in terms of double digit, which we will see we will be able to achieve in financial year 24. In terms of margin, so we got a benefit of operating leverage because of higher revenue, and as I mentioned, we had a higher portion of spare part sales, which has resulted into the margin in excess of 20%. On a full year basis, I think our margin should be in the range of 16 to 17%.
Got it, Ankur sir. Just a clarification. When you say higher share of spares and exports, can you broadly indicate what could be the mix?
So spare parts is almost 25% more than what we normally used to have in any of the quarter in terms of proportion.
I mean, the share is higher by 25%.
Yes.
And what would be the share, sir?
So share is almost in the range of 12 to 16%.
12 to 16%. Got it, sir. And what would be the export share?
That is in the range of 4 to 6%.
Got it, sir. Thank you. Thank you so much. I'll come back in the queue for more questions.
Thank you. The next question is from the line of Gunjan Priyani from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my questions. I have follow-ups to what Raghu had asked. Firstly, on the margin, this 3.5 percentage point improvement Q on Q just seems very steep. So I'm just stepping back and looking at this sort of volatility that we've seen in the margins, dipping to 8% and then now back to 13.5. I mean, great outcome, but I'm just sort of struggling to understand, what have been the levers, and from here on, all of that cost improvements that we had to do, all of those are behind, and from here, it is just more about operating leverage and commodity, or is there something else also that I should keep in mind?
Hi, Gunjan, so this is Bharat Madan. So obviously the margin is not just one factor, it's a combination of multiple factors like you mentioned. So obviously deflation was a larger part which was there, but obviously there are also other initiative on the cost front which have been taken. So both on the material cost side as well as on the fixed cost. So as you can see, the fixed costs also have been kept under check in this quarter. And cost saving also which is happening on the material cost front, which is a continuing effort. It's not a one-off effort which will not happen. So this will continue to happen in the balance of months too. So these two levers will continue. Obviously we can't control the commodity price, so that will be an external movement which will be there for everyone. But the other factors are more internal to us, which we are trying to focus on now to improve the margin further from here.
So from 13.5% these levels, you still have some more fixed cost rationalization, as an upside to play out, right? I mean, that's what you are indicating, that there's more scope of improvement there.
Yeah, there's an improvement, but there can also be hidden costs, which we are not aware of right now. So that is why we're keeping that as a cushion. So hopefully, if everything remains constant the way it is today, yes, then there can be possibility of improvement. But as you know, the product mix also keeps on fluctuating, so quarter to quarter. So that could be another risk, which will be there. So even though this quarter we have seen a good performance of 41 to 50% in the market share, HP share has also gone up, and we've seen a very good growth number coming in more than 40 HP segment, so which is a positive sign. But whether that will sustain in future or not is difficult to say. So that's why I think as of now we're saying we should be able to maintain these sort of levels in the balance of year, but yeah, with a positive side to that.
Okay, got it. That's clear. And second, on the growth outlook, I had a couple of follow-ups. When I look at the retails, they just seem very high in terms of growth. There's a double-digit growth in retails if I look at YTD on the Vahan number. Then I mean, generally from where we started the year expecting monsoons to be weaker, and they've just, they've turned out to be better. Is there a case that, we are conservative in calling out low single-digit growth outlook? I mean, I saw that you had given about mid-single-digit growth guidance in the annual report. So any change to the thought process in terms of seeing tractor as better growth in F24 as well?
Hi Gunjan, this is Harish. No, we're retaining that particular growth of the market as of now. Speaking of retail is more a function of our efforts in the market on the ground level. So a lot of activations, a lot of activities, a lot of key dealer focus on key segments and products have happened to drive the retail growth for us.
But what I was meaning is that retail is actually showing double-digit growth for YTD F24, whereas our outlook for whole of this year is low single-digit. So, is there some disconnect between the Vahan number and the wholesales? Is that something that we should keep in mind, because the number on Vahan just seems very strong?
You're saying the market for retail is growing double-digit.
So the last year number actually on Vahan portal seemed to have some issue, because we also looked at the retail data and it was showing very strong growth, which actually is not the case which is on the ground. So, but the data looks like more issue with the last year number than with current year number.
Okay, got it. And Haritha, you mentioned that subsidies softening as an issue. Can you just clarify? I mean, the general MSP and farm sentiment looks okay to you, but what is the subsidy element that you had pointed out earlier?
So there are times when the states bring out certain subsidies on tractors for the farmers. So in certain states, for example, Maharashtra, we see a certain softening of the subsidies. Whereas other states are picking up. Like Gujarat is picked up significantly, but Maharashtra is softening. But net on a balance, because Maharashtra is a bigger state for tractors as compared to Gujarat, there is a bit of a lowering of volumes because of subsidy softening.
Okay, got it. And last question, any update on that Kubota marketing, that merger that had to happen? Any refreshed timelines around it?
So we got the approval from Stock Exchange and SEBI now. So we have filed the petition with NCLT. So we're just waiting for further hearing to happen on that front. And obviously that will be followed with the meeting of shareholders and creditors before they finally give approval. So we're still expecting maybe another 6 months sort of time frame, looking at the past experience with NCLT. But all other approvals are in place now. So that's our last step which is pending.
Okay, got it. I'll join back with you. Thank you.
Thank you. Before we take the next question, I'd like to remind participants to please limit your question to 2 per participants only. You may rejoin the question queue if you have a follow-up. The next question is from the line of Sonal Gupta from HSBC Mutual Fund. Please go ahead.
Hi, good evening, sir, and thanks for taking my question. Just on the RM cost side, have we seen, because some other companies have said that the steel prices have gone up in this quarter and then they expect it to come down next quarter. I'm just trying to understand for us, has there been an increase or we've not really, seen any sort of a major change?
So there was some increase in between, but like you said, in tractor cases, it's not the steel which really matters. So in our case, like we mentioned in the past, I think the major cost is coming from casting, where the impact was not much. But in construction equipment business, we had seen that impact coming in, during the quarter. So that is where I think we're seeing that effort will be there. But now, as of now, looks like there's no major pressure on those prices. But yes, that is one business which gets impacted because of these changes.
Right, but casting maybe you're seeing with a lag, but that impact will come, right? Like the pig iron or whatever.
It's come, but it's not to the extent what you're seeing happening in sheet metal. But yes, the impact has been there. So we're seeing that impact now coming in.
Got it. And just on the, related to that, the price increases, what sort of price increase did you take in Q4 which would have had some follow through in this quarter?
So we had taken in Q1 actually, this quarter only in June, which we had taken the price increase, so which was done actually towards the middle of June. So really the impact will come in the next quarter. So in Q4...
So there was no price increase in Jan to March?
In Jan to March, there was no price increase.
Okay. And so lastly, could you just tell us about, in terms of the export opportunity and export of tractors from Escorts for the Kubota network, what's the time frame like? I understand you are sort of working on the products, so any updates there?
Yeah, so some of the exports obviously even now is happening to Kubota. So even in this quarter, we have roughly 32% of export was through Kubota network. But having said that, like you mentioned, so there are products development which are underway, and there are also some quality issues which are getting addressed for exporting to Kubota globally. I think once those issues get sorted out, which we expect will start happening now from this quarter, from second quarter onwards. So from September onwards, we expect, I think the pickup will start happening in the export numbers.
So, then the product-related stuff is largely done? Is that the way to...
No, so right now we are really looking at the quality improvement in the existing product, right? The development process will take some time because that will be then for the new market like US, etc., which we want to open. So that we not yet started. So that will obviously happen once the products are in place. But obviously we got a request now from Kubota side in terms of what sort of product lineup they want. And that work is already started happening now on that. So development process is on, but it will take some time. So we don't expect that full benefit will actually happen now this year. Maybe from next year, major improvement will start happening on those numbers.
Got it, sir. Great. Thank you so much for taking my questions and congrats on a great set of numbers.
Thanks.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Yeah, thank you. Congratulations on good set of numbers. Just a follow-up on exports. So basically, we have seen a double-digit decline.
Sorry to interrupt. May I please request you to speak a bit louder? Your audio
Sure.
is not very audible.
Is it better?
Yeah, we can hear you.
Yes.
Yeah. Just wanted to get a sense on exports because the volume have been declining for in a few months. So what is happening over there? Which geographies we are seeing some demand pressure? So any color on that would be helpful.
Yeah, so right now export market is under pressure. So both the European market where the larger exports are happening as well as US market, the demand has slowed down, especially for compact tractors. Where during the COVID time, but this segment which is represented through the hobby farming segment. So you're seeing the COVID time, most of the people were working from home, so there was a great demand which came up, for the entire period of 20 to 22. So those 3 years were really good for the business there in these markets. But now after the markets have started opening up, people have gone back to work. So you've seen the demand actually is coming down, and then obviously there are pressure on inflation and recessionary outlooks in the European countries. So where again the demand has been impacted. So in some countries we are again like country like Poland where we are exporting, they were waiting for the subsidy program which has not been started because of their own financial pressure from the government side. So I think all those issues are impacting the demand in some way.
Right.
So we expect maybe towards the end of this year we'll see maybe some pickup will start happening in these markets, where they say export value start growing.
Understood. Understood. And just how is our product portfolio shaping up on the farm implement side, and what will be the contribution from that segment in, let's say, in Q1FY24 or FY23? Any color on that would be helpful.
So the numbers are looking up, but since the base is very low for us, because we are essentially into the very basic implement right now. So the numbers are almost showing 30-40% growth, but since the base is so low, it won't be really material even for this year. So that is on the implement side. But obviously, in addition, there will be things like harvesters combined or transplanters, which will come into the company after the merger. So that is a sizable business which the other JV has. So if that also gets combined, then obviously we'll have a sizable business in terms of implement and harvesters put together. So for next year, we'll expect, I think, it will be a significant business for us, 400 crores plus, sort of top line coming from this business alone.
That's great. And just lastly, on the construction equipment side, what are our revenue growth expectations for this year? And margin also on a YOY basis or on a QOQ, the dip is very low. So what is driving this margin improvement, and is it sustainable?
Sanjeev, you want to respond?
Yeah. So primarily, the margins are sustainable. That is what we see because it is based on the very high demand from infrastructure, and mostly the equipment which are being sold today are going into the project, and this demand looks to be very sustainable right through the year. And we see that the commodity also is not putting any pressure as of now, which was the case last year. And prices have stabilized, and price realization from the market is also very good. So it looks sustainable both in terms of volume as well as margin.
Understood. Thank you and all the best.
Thank you. The next question is from the line of Mitul Shah from DAM Capital. Please go ahead.
Thank you for opportunity and congratulations for a very strong performance. Sir, first question is on tractor inventory. Considering this time festival getting delayed by 15-20 days, so what is the industry-wide inventory at present and for us, and is it coming down, and for next 1 or 2 months, how one should look at that?
Hi, Mitul, this is Harish. I won't comment on the industry inventory as of now because it's still something that we don't have. Second, our inventory, our focus is on bringing the inventory down currently. So if you take a look at our inventory at the end of Q1, both dealer as well as our own inventory, it is lower than what it was at the beginning of the quarter.
By how much in terms of days or numbers it's reduced roughly?
So you can say that currently our inventory is in the range of 4 to 6 weeks is what we retain at dealerships, or 4.5 weeks, which is still the same.
The second question is on localization for Kubota tractors. So what is the status there, and going forward in next 2-3 years, how one should look at product mix in terms of Escorts tractor compared to this Kubota tractor mix in overall portfolio?
So in Kubota, Mitul, the major localization which is to happen is on the engine front, so which will only happen once we have the greenfield facility coming up. So which will start with the engine manufacturing, which will be Kubota make engine, which will be made in India. So till that time, they will continue to import the engine, but they will be obviously planned to also have mix and match like you mentioned. So some engine from contract will get used, in the Kubota product. So that is something which will be worked out as an interim measure, to save on the cost. So that is something which will happen. So otherwise, if you look at greenfield, I think that's just a plan is to go live only by FY26. So there's still some time, before we come with the full-fledged manufacturing for Kubota engine in India.
So non-engine part is largely localized.
Yeah, ours is all localized.
And lastly, sir, what would be your medium-term roadmap for construction equipment as well as railway, considering Kubota is globally not present in railway business, and on construction side also, roadmap for double-digit margin, if you can give some details on these two.
So in construction equipment, Kubota is present because they got a very large business in many excavators, and they also supply engines to most of the industrial OEMs. So the construction business is something which will continue. On railway, so as they had mentioned even in the beginning, and like you rightly mentioned, it's not a core strength for Kubota, so they can't add much value. So I think we have to look at options in the long term, what we do with the business, whether in terms of partnership, we look for some partner who can help us in growing this business further, or maybe look at some alternate options.
Thanks, sir, and all the best.
Thank you. The next question is from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Thank you so much for the opportunity and congratulations on good numbers, sir. So how are you seeing the demand from the haulage segment in recent months? Some of the state governments have been stricter on regulations. How do you see this impact on demand over the medium term?
If you technically look at it today, hi, this is Asia. We are seeing actually a growth in the haulage segment, driven primarily due to the infrastructure projects which is coming up in a lot of states. So if you take a look at the 31 to 40 segment in some states, it is growing, whereas in other states it is degrowing. So if you take a look at the segment overall, which is a 31 to 40 segment, it has been more or less flat for the year, but we feel this segment has potential going forward, especially for haulage. Hello?
Mr. Mumuksh, your line is unmuted. You may please go ahead if you have any further questions.
Can sir?
So your audio is breaking up. We are unable to hear you.
Can you hear me?
Yes, sir. Now it's better. Please go ahead.
Thank you. Just on that, some of the state governments have been stricter on regulation side for tractor being used for haulage purpose. Are you seeing any impact on the demand because of that?
No significant change coming for us, because most of the regulations that we are seeing is more in the municipal corporations, and our tractors typically sell beyond municipal corporations.
Got it, sir. Sir, second question, on the JV company's profitability has improved in FY23. What kind of profit numbers you see for FY24? And do you see the lower margin dilution impact once the amalgamation happens? So earlier you guided for 1.5% to 2%. What kind of guidance do you see now, sir?
It will be similar. I think the number which we had indicated. So it will be a similar drop which will happen initially before we start, working on improving the margin and getting the synergies out of the merger.
Got it, sir. Thank you so much.
Thank you. Before we take the next question, I'd like to remind participants, if you have a question, please press star then 1 on your touchtone telephone. The next question is from the line of Mayur Malik from Asian Market Securities. Please go ahead.
Yeah. Hi. So, just trying to understand the reduction of share capital. So we've got it down to 110. Is this going to be the final after the merger as well, or there are going to be issue of new shares once the merger is done?
Yeah, obviously, in the merger, there will be some issues of capital which will happen. But given the exchange ratio, we don't expect this to material, but this is a small dilution which will happen. But it's not going to be very significant.
Okay. And coming back to the business, so, as we've rightly been noticing, the retails for this fiscal have been pretty good compared to possibly where we started. But we do not really see that reflecting in either of the growth numbers if I look at April to July, for most players. Now, does this mean that in March end there was a huge inventory and that has kind of got corrected in the system, and now we have a scope for kind of building up inventory again going forward?
So we responded to the similar question, I think, in the beginning from Gunjan. So the retail data, what we're looking at from last year, seems some issue there. Well, some looks like incorrect data there.
No, sir, I'm not trying to compare this to last year's number. I'm just saying that just the April July number that I look for you. So you are at 32,000. So you are like a 0% growth in dispatches. But retail numbers have been pretty good only for April to July fiscal. So just trying to understand that, was there some inventory that was built up in March and that has seemed to got corrected?
If you see the total growth that we have on releases, our billings is around 2.5%, whereas our growth in retail is higher. There was no inventory build up because the absolute reduction is not significant enough to cause a change. But yes, there is a reduction. There is a reduction in inventory.
Okay. And is there a way to read? I'm just trying to understand. So, since the trend came in on the 50 plus HP, we always had a theory that, at least for the near term, the likes of you and Mahindra, we possibly see a growth into the 30 on 40 since you are leaders in that segment vis-a-vis the other guys. Are you actually witnessing that into your retail markets?
So we are seeing a growth in the 41 to 50 for us as compared to, let's say, the greater than 50.
Right. So this means so there is some kind of shift, right? Since the trend changes have incurred on the 50 plus numbers.
Yes. We are seeing that shift.
Okay. That should be all. Thank you so much.
Thank you. The next question is from the line of Samir Deshpande, an individual investor. Please go ahead.
Hello. Congratulations, Mr. Madan and the team for excellent results. And I would like to know these new products from Kubota, which are likely to be introduced, which maybe after the merger of the companies, would they be in the form of trading or they will be manufactured by Escorts here?
They will be mostly manufactured. Trading will be limited.
The excavators, mini excavators, as well as these transplanters and harvester combines, etc., all will be manufactured.
That will continue to be traded. So the implement, because there the volumes are not very high right now. So manufacturing it in India as of now doesn't make sense because it will not be really viable. Business case will not be there for those small volumes. But obviously, once the volumes start growing up, so that is the intent. Finally to also start manufacturing. Gradually those things also in India. But as of now, we started developing some of the parts for those products in India. So we are already doing some parts for harvester, for example. They will plan to do that, in India, and we are also doing some axles, for transmission. Some of the parts which are getting already made. So those parts are getting exported. But as the volumes continue to grow, so we'll also look at, explore the options of localizing those and making manufacturing also in India.
And actually, Kubota tractors and Escorts together, what will be the market share?
So it's in the range of 12.5% to 13%.
Which currently we have about 9.7% now. Escorts Kubota, this listed company. Now this together, it will add another about 3%.
Yeah, 2.5% to 3% range.
Thank you and all the best.
Thank you. The next question is from the line of Saral Dilip Seth from Insect Securities. Please go ahead.
Yeah, hi team. Congrats for great set of numbers. I had one question. So, wherever we are not strong, rest of the region, we've outpaced the industry by 370 basis points. Just wanted to understand what are we doing there differently that we are being able to gain market share.
Which market you are specific?
So, we mentioned that in rest of the region, we've grown by 8.7%, while... Yes, sir. So what is driving this strong outperformance versus the industry where we are not that strong?
See, our focus in the opportunity markets has been there for a while, especially two things. One is we are focusing on distributors in order to increase the coverage. So increase of coverage is happening in the opportunity markets for us, which is not so much of an opportunity in strong markets. Second, we're also doing a segment-wise HP focus, which is basically, if you see the 0 to 20 segment, it has grown significantly for us in this first quarter. Third, we are also using a lot of digital tools and activation to penetrate into the opportunity markets.
Understood, sir. That was very helpful. And just a follow-up on this, in the strong region, we have been unable to, gain market share, but we are maintaining that. So any outlook on that in terms of market share in the strong region?
So our focus continues to remain in our strong markets. We will continue to do whatever we are doing so far. Plus, we want to drive additional focus on the 31 to 40 HP foliage segment in strong markets.
Right, so that was helpful. So overall market share guidance, anything you want to have as an aspiration over next 2 years? 2 to 3 years?
We obviously want to grow as a market share, but I'm not putting a number to it right now.
Understood. That was very helpful, sir. I'll fall back in queue. Thank you.
Thank you. The next question is from the line of Chandrakant Dhanuka from CD Equisearch. Please go ahead.
You are thinking the same answer. Hello.
Yeah. So hello. I just have one question. Like, how do you think you will gain market share in international market?
In international market, as you know, so we are really banking on Kubota network, but in international market, your distribution is very important. Now, if you look at the competition also, there are two ways you can do it. Either you have your own entity there and you set up your own retail distribution, or otherwise you go through a distribution route. Now, wherever we are operating basically through a distribution model, where obviously your margins come under pressure, but at least your business is secure. But now, since we got Kubota as a partner and they are present in more than 100 countries globally, they already got an established network in most of the countries. So our idea is to leverage that network. And they need products from India because they're facing a lot of competition globally from players from India, China, Korea, and they want those products which can be sold, to compete with those players. So that's a win-win for both of us. So we get an established network and they get the product portfolio from us. So this is something which we are intending to use, for the international market area.
Okay, sir. But they're actually they're established foreign players also there. So how you are going to tackle that thing?
So like I said, India basically supplies the compact tractors which are cheaper in value. So it's a value for money tractors, which go from India. And there are similar tractors which come from China, Korea also, to those markets. So this is the segment which is unaddressed from the foreign players. The product which they make obviously are high in cost and they are higher horsepower tractors. But India supplies to the smaller HP segment, which is essentially less than 120 HP, which is the segment where Kubota is strong globally. And this is a segment which we want to really contribute, in terms of the low end of the market in those markets, where you already seen a lot of export is happening from India. So last year the total export from India was almost 125,000 plus. So that export numbers are growing. So which is where we also want to contribute.
Okay, so we would differentiate in the price thing with the competitors.
Yeah, that's right.
Okay. Thank you, sir.
Thank you. The next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity. Sir, in construction equipment segment, realization has gone up by 4% quarter on quarter. What is the reason?
It's a favorable mix because we are selling the higher end of the cranes. So we are not really very strong player in the lower end of the crane. But the higher end of the crane where your realizations are much higher, so that is one definitely the advantage, and you're seeing the realization also moving up, and the margin profile is also better there.
So going ahead, the realization will be the same and will be able to sustain this sort of the mix.
So as of now, the demand momentum is quite strong. So maybe I request Sanjeev to add to that.
Yeah, hi, Sanjeev. So, yes, you are right. So, the demand has been shifting towards the higher tonnage, higher capacity machines because of the bulk infrastructure which is taking place. So, that demand is definitely sustainable, and at the same time, we are stronger in that segment compared to our competition. So, that is helping us.
And in this quarter, the compactor volume jumped 88% versus industry growth of 32%. So what is the reason to outperform industry growth? Is there any new product launch in this segment?
Yes, there is a new product launch, but for compactor, we have been working very hard over the last year. But last year, the industry did not support. The industry was lower by 5% over the previous year. So the hard work which has been done in the market is really helping us. We also have introduced a new product which is 11th category soil compactor, which is a new segment and which we are not very strong in, and that is what is going to add volume to the future. So I think it is more about penetrating the segment and penetrating these markets which were untapped by us.
So, what is the full year guidance for the construction equipment segment, sir, in FY24? Margin guidance?
So margin, we expect we should be able to sustain the level what you are seeing now. So it should be high single digit margin only.
Okay, that's all.
Thank you. The next question is from the line of Raghunandan from Nuvama Institutional Equities. Please go ahead.
Thank you, sir, for the opportunity again. My question was to Harish, sir. Sir, can you talk a bit about how you are looking at improving the product portfolio over the next 1-2 years? What would be the areas of focus for introduction of new products? What white spaces you are trying to cover? Specifically paddy specialist tractors, below 30 HP tractors. Your thoughts will be extremely useful. Thank you.
So the good exercise is still an ongoing exercise and a continuous exercise that we keep looking at. At any given point of time, the way we approach it in two ways. One is where are the segments where we don't have tractors, and two is in which segments our tractors are to take the lead in terms of competitiveness of USPs, features, specifications. So if I take a look at the latter, that's a continuous ongoing process across all the HP segments. Second, if you take a look at the new tractor introductions, we have so if you take a look at the new tractor development, for example, we will soon be coming up with one of the flagship models in the Farm Track series, which we will be launching sometime in the next 3 months. So these are new product introductions that we will come in order to take opportunities within the market, whether it's in the entry space, the mass segment, the premium, or the entry premium segment. So this is the way that we approach. Third thing, the way we look at it is that we have 3 brands currently, or going forward we will have 3 brands, which is PT, FTA, R-Track, Farm Track, as well as Kubota. So we will structure the portfolio in such a way that Kubota occupies the premium segment, Farm Track occupies the mid segment, and Power Track occupies the entry to the mid segment. That's the way that we are going to approach the market over the next 3 to 5 years.
Got it, sir. And in terms of the pricing, if Farm Track is 100, would Kubota be like 110 and Power Track be 90? Would broadly that be the pricing band?
I don't think there is a mathematical formula like that we have worked out, but our products will be competitive within the markets and within the segments that they operate in.
And sir, in terms of cross-selling, would you look at it as a low-hanging fruit and any steps there to, leverage, where Kubota can leverage the existing network of Escorts?
So yes, I think going forward, we will look for opportunities for how do you call it, optimizing our network. If there are right spaces for any particular brand, we will offer the dealer of that particular area the first right of refusal for some other brand's dealership.
Got it, sir. And to Bharat sir, in terms of component exports to Kubota, if you can talk a bit on that in terms of which are the parts that are being exported on a pilot basis. We know that $500 million is the aspirational target, but how do you expect the ramp up in revenue to happen? What could be the revenue in FY25?
So, Raghu, right now, like you mentioned, the export of component is happening to the other two JVs. Because they were already supplying earlier to Kubota network and they had developed some vendor base. So the Kubota products are also being made in those JVs only in API, for example, in the manufacturing JV. So Escorts is not making any Kubota product right now. So till the time merger happens, obviously we'll not be doing anything on that front. But the export will continue to happen from both the JVs, which currently is also happening. So going forward, there's a plan. So as you go into the greenfield facility, there's a plan to set up a global sourcing center from India. And the purpose of this, vertical will be essentially to look at opportunities where we can actually source components which are either developed in-house or through a third party, where Kubota can save the cost globally. And most of the players are looking at China plus one strategy, and Kubota is also facing a lot of challenges in the supply chain, in the past 2 years in sourcing from China. So they're obviously looking at India as an obvious choice, in terms of the strategy for developing those components. So yes, the expiration which we given is something which we think is still an underplay. The opportunity is much larger. So we'll have to really see when the things really start happening here and more localization happen. So how the business really grows. But in terms of our aspiration which is there, we think is definitely achievable, and probably we should do better than that.
Understood, sir. And which are the components, sir, being targeted? Would it be like axle, transmission parts, gears? If you can talk a bit on that.
So like I said, it will depend on what products get localized here in India. And obviously the major portion will be tractor. So the tractor parts will something which will constitute a major portion. And it will also a lot of demand coming from the US market, because US got their own manufacturing, but the parts they get is quite expensive. And the supply chain is quite complex because they're coming from multiple countries. So they need to centralize those supply chains too, which probably where the India can help. So right now we don't have a list really. Obviously the procurement team and the global sourcing team is working on this, as we say, and they have developed some sort of, database in what sourcing can happen. So I can't share the data with you as such, right now, but as I said, the team is working on this, and we think we should be able to do better than what we aspired for.
Thank you, sir. Wishing you all the best.
Thank you. The next question is from the line of Chirag Shah from White Pine. Please go ahead. Mr. Shah, you may please go ahead with your question.
Hello, am I audible?
Yeah, we can hear you.
Yeah. So just one small question. So I see sequential market share loss for you. Can you talk a bit about it? Is it driven by what are the drivers for the drop in sequential market share?
So, this is Harish. If you traditionally look at it, the strongest quarters that we have are quarter 3 and quarter 4. So I won't compare the market share to market share sequentially, because it's just the differential nature in which the country operates in terms of where the tractor demand comes from. If you are taking a look at the quarter on quarter, if you compare a quarter this year versus last year same quarter, there is a growth. So that's a better way to compare.
Okay. So it's more of a regional nature, nothing else to take a note of. Fair part. Yeah, that's it. So one last question was on railways, if I can squeeze in. So we have seen a very strong growth in railways. Is it driven by, is it in general railway cycle you are seeing this, or there are certain specific products or demand categories which is driving this? And any more tenders or any more participations, if you can talk about on the railway front, including any expansion you are looking at in your offering, book of offerings?
Hi, Chirag. Good evening. This side Ankur Dev. So, first of all, we are seeing a good traction from the railway manufacturing side also. So, there is a good momentum in terms of manufacturing of passenger coaches and freight wagons. Other than this, we have been introducing a lot of new products. So, in Q1, we have actually commercialized 2 of our products, which were actually in the field trial for last 1.5 years. So basically brake pad and brake disc. So these 2 products have been commercialized and they have contributed in this revenue. And as I mentioned earlier in this call, we have also seen good momentum in the spare part sales and in our exports revenue. So all these factors have really contributed in this growth momentum. And I think in future also there are more products which will get commercialized. So and we will be launching many more products in this continuation. So I can say that in first quarter we have got first time order for one of the new products, which is electric panel. So we are working on many such products, and this introduction of new products will certainly help us in growing this top line for the railway business.
Thank you. A reminder to the participants to please limit your question to 1 per participant only. The next question is from the line of Mitul Shah from DAM Capital. Please go ahead.
Thank you for follow-up opportunity. So my question on construction equipment side, any meaningful change in the inventory Q-on-Q here also, and any pricing action taken for this? And also, if anything, pricing benefit on railway side also.
Sorry, Mr. Sandeep this side, but I could not hear your first question, please.
Mitul, can you repeat your question? I think Sanjeev was not able to hear it.
Yeah. My question was on construction equipment side in terms of any meaningful change in inventory here, similar to tractor on Q-on-Q basis. And on pricing side, we have indicated 1% increase for tractor. Any price hike taken for construction equipment in last 1 or 2 quarters? And similarly, any pricing benefit we have seen in railway business also, price increase or anything?
Yeah. So, Mitul, coming to the first question, if I have understood correctly, the inventory is for our business is not such a major impact, because we operate at roughly about 15 to 20 days of inventory, and also our channel partners operate at about 15 days of inventory. So that does not impact so much in terms of quarter-on-quarter change, and this has been traditionally going on for quite some time. Coming to the price increase, we've taken 1 price increase at the start of the Q1. And the price realization has been reasonably well because of the demand, and we do not see immediate need or opportunity to do another price increase. We will wait till start of Q3 to see the next opportunity.
Thank you. The next question is from the line of Mausumi Paul from Equentis Wealth. Please go ahead. Mausumi Paul, you may please go ahead with your question. Your line is unmuted. Mausumi Paul, if you can hear us, your line is unmuted. Kindly go ahead with your question. Looks like no response from the current participant.
So just to respond to Mitul's question on the railway business under the pricing, so I'll request Ankur also to respond to that.
Yeah, good evening, Mitul. Ankur this side. So I think in railway business it is quite different in terms of pricing. It is completely tender-based business, and there are lot of vendors, approved vendors for each of the product category. So it is really different, and it is really difficult there to increase the prices. So that's how is the nature of the business. Thank you.
Thank you. Ladies and gentlemen, there are no further questions. I would now like to hand the conference over to Mr. Bharat Madan for closing comments.
Thank you, ladies and gentlemen, for being present on this call. For any feedback and/or queries, please feel free to write in to us at investor.relation@escortskubota.com. Thank you very much and have a good evening.
Thank you. On behalf of Kotak Securities Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.